Imagine turning what you're passionate about into a $400 million exit. That's exactly what Kayla Itsines did with her fitness platform. What began as backyard boot camp workouts and Instagram transformation photos grew into Sweat, a global fitness app empire. In 2021, Kayla and her partner sold Sweat to the tech fitness company iFit in a deal widely reported at about $400 million. Let me break down how she scaled a simple workout program into a multi-million-dollar business and what any entrepreneur can learn from her journey. Kayla's story starts humbly. A personal trainer in Adelaide, Australia, she noticed women in her gym were using men's workout plans that weren't suited to them. She began running small, women-only group workouts in her parents' backyard, focusing on short, high-intensity routines and real nutrition advice. Kayla used Instagram as a progress diary, posting clients' before and after photos, and it struck a chord. People from outside her city saw the transformations and started reaching out, asking for help. This organic reach proved there was a huge demand for her approach. Kayla later explained she was never aiming for money, but rather wanted to empower women. By building a supportive community, she established trust and rapid word-of-mouth growth. By 2014, Kayla and her then-fiancé, Toby Pierce, turned those backyard workouts into a digital product. They created the first bikini body guides, ebook workout plans that anyone in the world could follow. The guides went viral. Within months, they reached over 1 million downloads. In 2015, they rebranded as Sweat and launched a full mobile app subscription. The launch was explosive. The Sweat app became Apple's top trending app the week it went live. Kayla then took the program on tour. The Sweat with Kayla Bootcamp World Tour offered free workouts in cities like New York, Los Angeles, and London, building a cult-like following. By 2016, Sweat was the world's most downloaded fitness app. The app expanded rapidly. It now offers over 5,000 workouts across 26 programs, strength, yoga, Pilates, and more in 8 languages, and is available in 155 countries. Through Sweat, Kayla essentially put a personal trainer in your pocket, making fitness accessible and global. As Sweat app scaled, so did the numbers. By 2020, the app had been downloaded over 30 million times. Its subscription model generated almost $100 million in annual revenue. On social media, Kayla's reach became enormous, over 13 million Instagram followers and 20 million Facebook followers, with more than 50 million women following her brand online. These metrics translated into real wealth. Just before the sale to iFit, Kayla and Toby each had an estimated net worth of about $209 million. In other words, the Sweat equity paid off. The real exit came in mid-2021 when iFit acquired Sweat. The deal terms were not officially disclosed, but industry reports pegged the price at around $400 million, what many media called a $400 million exit for Kayla. In the deal, Kayla and Toby remained involved with the business as it joined iFit's family of brands. iFit even pledged to keep Kayla as a trainer and maintain the original programs. This ensured the loyal Sweat community continued to receive the product they loved, now backed by a larger fitness tech company. There's a great lesson to learn. Kayla's story offers several wealth-building lessons for any entrepreneur, not just in fitness. First, solve a real problem and serve a clear niche. Kayla saw women were underserved by fitness programs and built a solution tailor-made for them. Second, build a community and brand before scaling. She engaged her audience authentically on Instagram, sharing client journeys instead of self-promotion, and fostered a supportive space. Customers became fans and evangelists. Third, pivot to scalable products. By turning in-person sessions into ebooks and then a subscription app, she transformed one-to-many distribution. Recurring revenue from app subscriptions, now roughly $100 million per year, replaced the limits of individual training sessions. Fourth, take bold growth steps. Kayla and Toby expanded globally through tours, translated the app into multiple languages, and constantly added content, thousands of workouts, showing how reinvestment drives scale. They combined tech, Pierce's expertise, with content. All along, they stayed true to their mission. Kayla repeatedly emphasized that helping others was her main goal, not just making money. Entrepreneurs can replicate her approach. The playbook of influencer-driven content plus subscription service has been proven in many industries. If you have deep expertise and can build trust like Kayla did, you could launch a digital program or similar platform. Key elements: social media marketing, community engagement, and valuable paid content are repeatable strategies. However, Kayla also had unique factors: perfect timing with Instagram's rise, a genuine passion for her niche, and the personal charisma that attracted millions of followers. So while the blueprint applies, find a need, provide free value, then monetize at scale, execution is tough. It requires relentless consistency, understanding your audience, and often a bit of luck or first-mover advantage. Many influencers try copycats, but few break out to this level of success. The lesson is model the strategy, not just the specifics. Looking ahead, this model is very sustainable long-term. The fitness tech market is booming. Market research forecasts that the global fitness app industry is set to triple over the next decade, from about $12 billion in 2025 to over $33 billion by 2033, roughly a 13% annual growth rate. That growth is driven by rising health awareness, better tech like AI coaches, wearables, and the convenience of at-home workouts. Since iFit, which Kayla bought, already integrates hardware and software, it did about $1.7 billion in revenue in 2021. There's fuel to keep expanding Sweat's offerings, like adding equipment-based workouts. Of course, competition is intense. Some big players like Peloton have had ups and downs, and keeping subscribers engaged is a challenge. Fitness trends shift, so ongoing innovation, AI trainers, VR gyms, and new workout styles will be crucial. But fundamentally, people always need health solutions, so a strong brand plus content vault like Sweat is positioned for the long haul. Finally, is there an investment opportunity in this model today? Directly buying Kayla's business isn't possible now, but one could look at related companies. iFit itself almost went public. It withdrew a $600 million IPO in 2022, and it raised $355 million in new funding in 2022, reflecting investor confidence in connected fitness. If iFit eventually lists, that could be one way to invest in this space. Other stocks to watch include Peloton, former darling of at-home fitness, or major sport apparel brands expanding in tech. For smaller bets, some venture funds target digital health or even ETFs for wellness tech. The bottom line, the high-growth, subscription-based fitness sector is attracting capital, but it's also tricky. Think about market saturation and churn. As Kayla's success shows, the winners build an engaged community and constantly evolve their product. If Kayla's story tells us anything, it's that strategic vision and execution pay off. By focusing on her audience's needs and scaling up thoughtfully, she built an app used by millions and turned it into a $400 million payday. As you chart your own entrepreneurial path, remember to identify your niche, grow a loyal community, and build a scalable revenue engine. If you liked this analysis of Kayla Itsines' business strategy, please hit subscribe to get more stories of entrepreneurs and wealth building. Which lesson from Kayla's journey resonates with you the most? Would love to hear your thoughts in the comment.